Come on, we'll start the next problem, that is 10th one. A firm is currently selling 9,000 units at a selling price of rupees 50 and a variable cost of rupees 25 per unit. Its annual fixed cost are 1,10,000. So presently number of units are 9,000, selling price 50, variable cost 25, fixed cost 1,10,000. The capital structure of the company consists of 10% debt of rupees 2 lakh and 10,000 equity share of 10 each. So we have debt and equity. The firm is taxed 50%. In the off season, the sales decline by 10%, and in the peak season, the sales increase by 10% from the current level. Current level of sales are given as 9,000 units, and during off season, the sales will decline by 10%. So 9,000 ka 10% 900. So subtract 900, 8,100. So during the off season, the number of units that we can sell is 8,100. And in the peak season, the sales will increase by 10%. So 9,000 plus 900, 9,900 units during peak season. Compute financial, operating and combined leverage. First question, you have to compute all the three leverages. Second, what is the effect of change in sales on EBIT? Third, what is the effect of change in EBIT on EPS? Last one, what is the effect of change in sales on EPS? So these are the different 4 questions asked. First, we attempt the first bit, that is calculation of leverages. 10th problem. Calculation of leverages. Current sales, 10% increase in sales, 10% decrease in sales, number of units. Presently it is 9,000 units. 10% decrease means 8,100. 10% increase 9,900. Sales at the rate of, what is the selling price? 50. Sales at the rate of 50 rupees. So see here, 8,100 into 50, you will get 4,05,000. Similarly, 9,000 into 50, you will get 4,50,000. 9,900 into 50, 4,95,000. From sales, we subtract variable cost at the rate of 25. The variable cost per unit is given in the problem as 25. So 8,100 into 25, it is 2,02,500. Similarly, 9,000 into 25, 2,25,000. 9,900 into 25, 2,47,500. This is the variable cost. Subtract, you will get contribution. 2,02,500, 2,25,000 and 2,47,500. From contribution, deduct fixed cost. The fixed cost is given in the problem as 1,10,000. EBIT. So 2,02,500 minus 1,10,000, 92,500. Similarly, 2,25,000 minus 1,10,000, 1,15,000. 2,47,500 minus 1,10,000, 1,37,500. Less interest on debentures. Interest on debentures. So debt 10% of rupees 2 lakh. interest on debt, 10% of rupees 2 lakhs, it is 20,000. Subtract. So 72,500. Then here it is 20,000 means 95,000. Here it is 1,17,500. 92,500 minus 20,000, 72,500. 1,15,000 minus 20,000, 95,000. 137,500 minus 20,000, 117,500. This is called PBT, less income tax, at the rate of 50%. Is it 50%? Yes, the firm is taxed 50%. So 72,500 into 50%, 36,250. 95,000 into 50%, 47,500. 1,17,500 into 50%, 58,750. 36,250, 47,500, 58,750. This is called PAT. It is called PAT, profit after tax. Then preference dividend we don't have. Number of equity shares. Number of equity shares are given in the problem. 10,000 equity share of 10 each. 10,000 shares given in the problem. EPS, PAT divided by number of shares. 36,250 divided by 10,000, 3.625, 4.75, 5.875. This is the EPS. Now we can find out percentage change in EPS. Now we calculate DOL is equal to C divided by EBIT. DFL is equal to EBIT divided by PBT. Last one, DCL is equal to C divided by PBT. That's all. Now we make the calculations. C by EBIT. 2,02,500 divided by 92,500. 2.19. 2.19. Next one, C. 2,25,000 divided by EBIT 1,15,000. That is equal to 1.96. Last one, contribution 247,500 divided by 1,37,500. 1.8. Now EBIT by PBT 92,500 divided by 72,500. 1.278. 228 we can take. Next is EBIT 1,15,000 divided by PBT 95,000. 1.21. Last one, 1,37,500 divided by 1,17,500. 1.17. C divided by PBT 2,02,500 divided by 72,500. 2.79. Here also contribution 2,25,000 divided by PBT 95,000 comes to 2.37. Last one, 2,47,500 divided by 1,17,500. 2.11. We can confirm it. After making this, we can confirm whether our calculations are correct or not. Simply multiply 2.19 into 1.28 you should get 2.8 or 2.79. Similarly, 1.96 into 1.21, 2.37, we got it. Multiply these two, DOL into DFL, you should get DCL. 1.8 into 1.17, 2.11. That's it. Our calculations are correct. Now, percentage change in EPS. Absolute change. Absolute change in EPS. First of all, how much is the EPS at present? 4.75. 4.75 minus. How much is the EPS? 3.625. Similarly, you can calculate 5.875 minus 4.7. This is the increase in EPS and this is the decrease in EPS. We are finding out how much is the change in EPS, increase as well as decrease. So 4.75 minus 3.625, 1.125. Similarly, 5.875 minus 4.75, 1.125. There is 1.125 increase and 1.125 decrease in EPS. Now, percentage change in EPS is equal to absolute change divided by present EPS into 100. That is equal to 1.125 divided by 4.75 into 100. $23.68. This is the percentage change in EPS. So plus 23.68. Here minus 23.68%. So we have completed the EBIT. EBIT, it is asking you to calculate all the leverages. We have calculated. Now BBIT. The BBIT, it is asking you what is the effect of the change in sales on EBIT. Effect of change in sales on EBIT. Change in sales is given in the problem 10%. Change in sales is given in the problem 10%. Change in EBIT we have to find out. Absolute change in EBIT. EBIT is here. So 1,37,500 minus 1,15,000. 1,37,500 minus 1,15,000. 22,500. Or we can take this also. 1,15,000 minus 92,500. 22,500. There is 22,500 increase and there is 22,500 decrease in EBIT. The percentage change in EBIT. Is equal to absolute change divided by present EBIT into 100. That is equal to 22,500 divided by 1,15,000 into 100. Divided by 1,15,000 into 100. It comes to 19.57. So we can say when there is 10% change in EPS, 10% change in sales, it leads to 19.57% change in EBIT. There is disproportionate change. जो रेट से EBIT चेंज हो रहा वो रेट ज्यादा है, किससे ज्यादा है? सेल्स। सेल्स सिर्फ 10% बढ़ रहा तो EBIT 19.57 बढ़ रहा। क्यों इतना ज्यादा बढ़ रहा? ऑन अकाउंट ऑफ ऑपरेटिंग लीवरेज। This disproportionate change is due to ऑपरेटिंग लीवरेज, OL। ऑपरेटिंग लीवरेज की वजह से दोनों का परसेंटेज चेंज सेम नहीं है, अलग अलग है। EBIT बहुत ज्यादा हो रहा सेल्स से। नेक्स्ट C पॉइंट, इफेक्ट ऑफ चेंज इन EBIT ऑन EPS। effect of change in EBIT on EPS. तो percentage change in EBIT, just now we have calculated 19.57%, whereas percentage change in EPS is equal to, already we have calculated 23.68। तो EBIT जो चेंज हो रहा है वो 19.57% के हिसाब से चेंज हो रहा है, जबकि EPS जो चेंज हो रहा है वो 23.68%। अगेन देयर इज disproportionate change between EBIT and EPS. This is on account of financial leverage. This is on account of financial leverage. Last one, D point. What is the effect of change in sales on EPS? Effect of change in sales on EPS. Percentage change in sales is equal to 10%. Percentage change in EPS is equal to 23.68. Sales जो change हुआ वो only 10%, जबकि EPS जो change हुआ वो 23.68%. This disproportionate change in sales and EPS is on account of combined leverage. Combined leverage. That's it. So in this problem, first of all, we have calculated all the leverages. In this table, we have calculated the leverages. Then after calculating leverages, it is asking you what is the effect of change in sales on EBIT, what is the effect of change in EBIT on EPS, what is the effect of change in sales on EPS. This is the complete solution. Now see the next problem. Next one, problem number 11. A shoe company has EBIT, operating income, of 3,20,000. Its capital structure consists of 10% debenture 10 lakh, 10% preference share capital 2 lakh, and equity shares of rupees 10 each 8 lakh. So 3 types of long-term funds we have: debentures, preference, and equity. Company is in 50% tax bracket. Find out the firm's EPS. Second, degree of financial leverage. And third, percentage change in EPS associated with increase in EBIT, 30% increase in EBIT. So what is the percentage change in EPS when EBIT has increased by 30%? What is the present EBIT given in the first line? 3,20,000. 3,20,000 is the present EBIT, और वो EBIT में 30% increase कर देना है, right? So calculation of EPS and DFL. This is problem number 11. Present EBIT, 30% increase in EBIT. EBIT present given 3,20,000. Presently EBIT is 3,20,000. In this 3,20,000 we have to make the increase by 30% into 30% plus 4,16,000. तो 3,20,000 में 30% बढ़ा दिया, इंक्रीज कर दिया 4,16,000 माइनस interest on debentures. How much are the debentures given in the problem? Debentures 10% debentures 10 lakh. Two lakh, 3 minus 1 is 2. 2,20,000, 3,16,000. This is the PBT. Income tax 50%, 1,10,000, 316, 1,58,000. This is PAT. From PAT we subtract preference dividend. The preference share capital is given in the problem 10% of 2 lakh. $90,000, 1,38,000. This is the profit available. For equity shareholders, number of equity shares. Number of equity shares given in the problem. Equity shares of rupees 10 each, rupees 8 lakhs. So 8 lakhs divided by 10, you will get 80,000. EPS is equal to profit available divided by number of equity shares. That is 99 by 8. 1.125. Here 138 by 80. 1.725. Percentage change in EPS. Lastly, it is asking you to calculate DFL. EBIT divided by PBT. So EBIT is 3,20,000. 3,20,000 divided by 2,20,000. 1.45. Similarly, EBIT is 4,16,000 divided by PBT 3,16,000. 1.32. Now only we have to calculate the percentage change in EPS. परसेंटेज चेंज इन ईपीएस, एब्सोल्यूट चेंज इन ईपीएस. नाउ देखिए ईपीएस कितना चेंज हुआ. 1.725 minus 1.125 is equal to 0.6. Percentage change in EPS is equal to absolute change divided by present EPS into 100. 0.6 divided by 1.125 into 100. 0.6 divided by 1.125 into 100. 53.33%. So here 53.33%. So it is asking you to calculate percentage increase in EPS and DFM. Both we have calculated. 12th problem. 12th problem is very important. Calculate OL and FL, operating leverage and financial leverage, under situations A, B, C, and financial plans 1, 2 and 3 respectively from the following information relating to the operation and capital structure of XYZ company for producing additionally 800 units. So we are given 3 situations A, B, C, and we are given 3 financial plans 1, 2 and 3. तो 3 situations है A, B, C और 3 financial plans है 1, 2 and 3, and to produce additionally 800 units. Also find out the combination of OL and FL which gives the highest and the least value. How are these calculations useful to the finance manager of a company? Selling price per unit 30 rupees, variable cost 20 rupees, fixed cost, situation A 2000, situation B 4000, situation C 6000. So 3 different situations are there for fixed cost. And financial plans 1, 2 and 3. In the first financial plan we have equity 10,000, debt 10,000, 12%. Second plan 15,000 equity, 5,000 debt. Third plan 5,000 equity, 15,000 debt. तो टोटल कैपिटल 20,000, वो 20,000 में. पहले प्लान में 10,000 इक्विटी, 10,000 डेट है. सेकंड प्लान में 15,000 इक्विटी है और 5,000 ही डेट है. और थर्ड प्लान में 5,000 इक्विटी है, 15,000 रुपए डेट है. तो कॉम्बिनेशन अलग अलग है. नाउ वी हैव टू कैलकुलेट OL and FL of all the 3 situations and 3 financial plans. So it is better to separately make the calculations for each situation. It is problem number 12. Calculation of leverages. Situation A. Fixed cost rupees. In situation A, fixed cost rupees 2,000. So in situation A, we are taking fixed cost 20,000 given in the problem, and financial plans 1, 2 and 3. First we take sales. How many units we are making? 800 into rupees. What is the selling price per unit? 30. $24,000.